Hi, this is Dave with Market Trading Concepts, closing out the week for Friday, June the 1st, 2012. It is Saturday, June the 2nd as I record this video. This video is going to focus strictly on energy, specifically oil and natural gas only. It'll be hopefully a quick 5 to 10 minute video, and we'll cover these markets in somewhat depth. So let's take a look at crude oil first, the CL contract in TradeStation, the CL contract specification. So looking at the crude oil from the Darvas squeeze perspective, what we're looking at here is you can see here that we had a short signal back here at around the, it's hard to read here because there were multiple signals, but it was around the dollar, just over, almost around $1, maybe $1.88. So we've identified that going back a number of weeks. Last week we talked about this potential level holding or not holding. We weren't really quite sure what it was going to do. This $90.80 level, and as you can see, last week we actually failed this level miserably, and we came all the way down to like the 84-ish level. So somewhere around, we had a level identified here of 84.36. We closed actually below this level, and now it seems the next level of support is going to be around the $77 level, 77.08. 77.50, somewhere around this $77 level is the next major support. You have levels in here where you can see that going back in time, they seem to be fairly key support levels. So somewhere around the 77, 78 level, it looks like we have some support. That said, this market is definitely not retracing. It is in a momentum situation. The heads up that we entered into a momentum situation is always a Darvas squeeze type of setup, and as you can see, the Darvas squeeze has played out nicely, but what seems to be quite extreme is we've already hit the weekly width of this Darvas box on a one-to-one basis, and there just doesn't seem to be any let up in sight. Now we're over 1.5 times the width of that box. That is what I would consider an extreme kind of momentum situation. So the question is, are we going to hold this level and bounce? If we do, we could be looking for a retracement to get short a little bit higher, or are we just going to fail this level, that become resistance, and then just push right back into, or not right back, but right down into this kind of ultimate target level? I wouldn't want to try to prognosticate where we might go beyond the 77, but I would expect some initial support there. Anyways, the question is are we going to hold this level, push higher, and then pull down, or are we going to just kind of push down to this level? So that's kind of what we're looking at here. The overall market structure is in a downward bias. Let's take a look at the daily chart, see if the daily chart is giving us any information here. I mean, we're in this massive downtrend, and you can see here we haven't tested the 21 exponential moving average at all since we kind of crossed the 8 cross below the 21, and we've been trending down. This initial target was hit. We broke this Darvas box. We didn't have a fresh Darvas squeeze, but you can see that we've been in this pretty strong trend down, and you can see that the angle of the trend started to accelerate. It's starting to kind of go parabolic here. As you can see here, this is kind of unsustainable parabolic. This is kind of like a nice 45-degree angle downtrend, and now we're starting to go a little bit parabolic or extended. So what I would expect to happen, I wouldn't want to get short here. May consider getting short if it broke some of those levels on the weekly chart, but I think what would make more sense is looking at, if you're not in this move now, the move is pretty much over unless you get a retracement back into, let's say, the 21 exponential moving average, and that would be a good area somewhere around this level. Now it is a dynamic level around $92.84 to $93 a barrel. It is a dynamic level, so if the price pushes up that's going to kind of bend the moving average a little bit. So it's something that needs to be evaluated on a on a dynamic basis. So if we get a move back into this level, I think the first test of the 21 exponential moving average would be an area to look at initiating fresh shorts, and I would be looking at maybe initiating a fresh short up here if we get that, with a first target of retest close to the lows, just in front of the lows, or halfway, half of the range of the distance from here to here, and then maybe looking ultimately, if you have the fortitude to stay with the trade, having the fortitude to stay with the trade, looking at a test of maybe the 78, get a little bit in front of it, but somewhere around the $77 to $78 a barrel level. It looks like it might go there. Some of the guys in the trading room believe it's going to go there. For example, John feels like it's going to go there, and I tend to agree with John. It looks like the market is probably looking to peg that level, it just wants to probably come down there and tag that level. As he's mentioned, we're in an election year in the States. There's a lot of reasons why, the risk premium of, I believe he said about $15 a barrel was priced in somewhere up here. So that has come out. The risk premium, when there were, not we, but when there were issues with the, I believe it was the Straits of Hormuz, the potential Iran conflict, there was some risk premium priced into to crude oil somewhere up in there of about, I'm being told about $15 a barrel. So that's obviously come out and it's been priced in now in the price, but now we're entering into, the selling action is kind of caught on and created more selling action. So that's basically what we're looking at for crude oil. Let's take a look at the natural gas and try and get an idea of maybe where that's going. So natural gas has been it's been a bit of a mover here, and if we look at the weekly chart, last week we said we had a structural technical kind of textbook overdone situation, 4 weeks of strength, retracement back to the 21 EMA on the weekly chart. So this is kind of a textbook technical pullback on any chart time frame. It just seems like it's really, really big move because this is based on the weekly chart, right? So now what we have happen is we found resistance at the 21 EMA. Initially we broke above the 50% and the 61.8% retracement of I believe it was this high to this low. Now we've taken that off the chart, and now what we're looking at now is we're looking at let me just move the chart around a little bit. We're looking at this level here. Okay, we're looking at this level and we're looking at this low and this high, because we've been in a slight uptrend. So now that we're pulling back, we're looking at this low, this high, 50% retracement at 243, and then we have the 61.8 at 234. So we closed the market slightly below this 234 level, around 232, 233. So that around the 232, 233 is a key kind of support level. It is a key level that intraday and on a daily basis we've tested, breaking through on the upside. Now we're testing it on the downside. If we decisively close below $2.34 or $2.32 a level in natural gas, the 232 level, then I think that opens up the door to potentially come back down and retest the lows all the way somewhere around $2. So this is kind of like an inflection point or a line in the sand point that we're looking at around the two, let's call it on the low side, the 232 level. If we don't hold that level, we get a decisive break of that level. That's going to open up the door for a retest of these lows. So that said, if we hold this level, then what we'll be looking for is if we get above, let's say we hold this level, we hold this zone, then what I'd be looking at is if we get a move above this $2.43 and we hold above $2.43, then we could be looking at a retest and a move back up to some of these higher levels. So those are kind of the decision points, the decision zones, $2 and let's call it 32 to 34 cents to be short below. If we get a decisive break, $2.43 to be long above. Treat this zone as your dead zone in between that range there. So that's basically your dead zone. So that said, let's move over to the daily chart and see if we can get some other indications of what's going on here. So on the daily chart, what we had is we had, structurally speaking, we had a close above the 21 EMA here. We had an 8 crossing above the 21 EMA. That in itself is a buy signal. So when that happened, we had a structure put into place where we had a potential for a reversal, and then you can see the break of this Darvas box, and it coincides with it putting in a higher high. So now we have the beginnings of a structure of an uptrend. So we have a low, we have a higher high, and then we have a lower high, and then we have up here in this area a higher high put in place. So now we have the beginnings of a structure of an uptrend, right? But then what happens is we come back down here to this trend line. See, and you can pick off these points and you can line up these 3 points, and now you have this trend line in place. Well, when we came back and we retested this trend line, then as you can see, we failed this trend line. So this failure of this trend line is a potential reversal of that structure, of this uptrend structure. So now what we have here, you have an 8 crossing below the 21. So I don't really like it to the long side any longer. I think what would make the most amount of sense, you have resistance here at 250. So I think what would make the most sense is to see this come a little bit lower and then to be looking at selling retracements back into the dynamic resistance around the 21 EMA. So I think what's going to happen is we're going to get a structure put into place where we're now going to go lower. But those key levels, and you can see the key levels kind of coming into play here. So let's call it 242 to 250 here. And you see this level of 232 coming into play. So those are really your key levels. So this is giving us a heads up, the 821 crossover, that the market maybe wants to go lower, the price action, the break of the trend line. So what you really need to see is that structure and those key support resistance levels kind of come into play, the failure of those levels, the initiation of a new structure down where we start putting in some stair stepping down, and looking at that to potentially initiate new trades. The major support is going to be around $2. That would be the major target on the downside if this structure kind of follows through. So I hope that helps. We are going to wrap up the series. We did a number of videos this week for this is the oil and natural gas video. On the energy side, we did a video for metals, currencies, notes and bonds, and stock index futures. So this will be the last video in the series for this week. I hope they help. Feel free to look up the other videos. We also have a meetup this weekend, tomorrow on Saturday, and we'll be focusing on technical analysis and chart reading part 3. So I hope it helps. Any questions, feel free to contact me. Have a great trading week and a great rest of the weekend.